Guys, investment is the smartest way for our money to grow and for us to be financially free. Hi guys, welcome to your channel and my name is Karan, and in today's video we will talk about what is the smartest investment available for us. Okay guys, great. So let's get started. So we know we invest our money in a variety of things, in a variety of instruments. For example, from a layman point of view, we invest in gold, silver, our traditional investment instruments. We invest in foreign currency. We invest in real estate, which is shops, houses, right? And then we invest in mutual funds. We invest in, let's say, antiques. We invest in a lot of things. Okay. We also invest in shares, bonds, fixed deposits, recurring deposits, post office schemes. We invest in a lot of things. Okay, so what is the smartest investment which has stood the test of time in last 100 years? Let's talk about it, guys. We should know, and we should also know how we can use it for our advantage, what precautions we should use, because when we talk about investment, there are always risks. There are always risks because nothing is risk free. As soon as we step out of the house, we face risk. So how will investment be risk free? If somebody is giving you a guarantee that this is risk free, it is guaranteed. So nothing is guaranteed in this world. If our life is not guaranteed, how can we expect investment products to be guaranteed? Okay, so I should not divert from the topic. So what is the smartest investment? So guys, stocks, equity shares is considered to be the smartest investment. Why? Because if you look at the data, equity shares, they have given the rate of return which is much more than all the other asset classes. Let it be bonds, gold, in the last 50 to 100 years. If I talk about US stock exchange, if I talk about India, okay, in India the Bombay Stock Exchange got registered in 1986, so don't quote me. So whenever this exchange got created, it was in the mid 80s. So from that time till today, from 1986 to 2022, Indian Stock Exchange, they have given a rate of return of around 16 to 17% on a yearly basis. Imagine 16 to 17% they have given on a yearly basis for last how many years? 30 plus years, 35 years. Isn't that great? My FD will give me 6%, and a stock market over a long period of time, they have given us a rate of return of, let's say, 15 to 16%. So there were times when the market gave a negative return as well. I am not denying the fact. There are situations, there are macroeconomic factors, wars, natural calamities, lot of things. However, equity market is a long-term thing, right? It's a long-term thing. We have to evaluate, we have to check, we have to see in the long term, in 10 years, in 15 years, what is the rate of return I'm getting. So in India, we have got a consistent rate of return. We should trust our Bombay Stock Exchange, our National Stock Exchange, and invest some portion in mutual funds, in direct equities as well. So that is the smartest investment available for all of us. So how are we supposed to invest? One way is to directly buy equity shares. You have a demat account. You open a demat account with a broker and you can go and select some good companies for yourself which you think over the lot, those who have stood the test of time, those who are giving good return, those who are making good profits. Or the other way, smarter way is that you go via the mutual fund route through a systematic investment plan. Every month you can invest some money through a SIP mode and build a corpus. In 5, 7, 10 years, you will see your investment will grow. You will get good return. You will see it for yourself. I have seen it. I will share in a separate video my first mutual fund experience versus my second mutual fund experience, what mistakes I made, what mistakes I made and how you can avoid those mistakes. I have made terrible mistakes, okay, because I was ignorant. I did not study. I was greedy. Don't be greedy. I'm telling you, you have to have a mindset of 5 years. Now let's talk about how to invest, guys. In equity market, in mutual funds, you have to be patient. First of all, select, if you are investing in direct equities, go for good companies. Those who are good companies, those who are performing well, and give yourself at least 5 years and invest in a SIP mode. Every month buy a few shares, every month buy a few shares, so that you get to average the price. Sometimes you buy the price which is at a higher level, sometimes you buy the price at a lower level. So if you keep on buying that over the long period of time, you will make good amount of money. More simpler way is that you go via the mutual fund. Even in mutual funds, you have to go via SIP, invest every month in SIP. Select a good mutual fund, maybe a large cap fund or a flexi cap fund. If you want to invest in equities, these are decent. Large cap fund will give you a consistent return of above 10%. A flexi cap will give you slightly more. So a good combination of large cap, flexi cap fund will give you a decent return over the long period of time. 4 to 5 funds will be sufficient for you. One large cap, one flexi cap, one mid cap, and maybe one small cap. These 4 to 5 funds are absolutely fine for you to invest for the long term. Okay, so guys, I have covered only one saving instruments. Why? Because this has given best returns. That's why I call smartest investment. So do some more research, do some more studies. I have personally learned how to invest in stocks by reading Philip Fisher, by reading books from Warren Buffett, by reading books from Graham. So guys, you have to read, but it's a fantastic journey. You will understand how you will evaluate a company, which stock you will purchase. So I wish you all the best. Do well, start small, maybe a mutual fund, and enjoy the journey. Okay guys, stay safe, have a nice day.